In this video, I'm going to show you a trend following strategy that you can use on pound-yen forex pair, which uses no indicators whatsoever. The strategy is based around a strategy that I've made a video about before, and I'll leave the link to that video. I'll put a card up and I'll leave the link in the description. You might want to have a look at that and have a look how I developed it using a step-by-step process. So have a look at that afterwards, but today I'm going to improve that strategy further by improving the quality of the trades by using just a simple trade filter. I've done a few recent videos about how to improve existing strategies, and one of my favourites is to use an exit at the end of the day if we're in profit, so the first profitable close type exit. However, that's not the exit that I'm going to use on this strategy. Actually, I might even try that exit just because the results might be interesting, but that's not the one we're going to use. I just don't think that exit is particularly suited to this strategy, and I'll explain why if the results confirm my suspicions. Firstly, I'm going to show you the results of the strategy from the original video, and the strategy I made well over 7 months ago, and I'm pleased to say that that strategy is still making new equity highs. So I must have done something right in that process. And then we'll go over to the whiteboard where I'll show you how to implement this trade filter, which increases the quality of the trades. And then we'll go back to the computer and compare those with the originals. So let's go over to the computer now and have a look at that original strategy. Okay, in this first workspace, we're looking at the original strategy without the trade filter. And it's exactly the same as in that previous video. Like I said, if you want to watch that previous video, you'll see how I developed it using each step of the development process. Very briefly, we're trading within a time window between 4 AM and 1500 hours Eastern Standard Time. If the high or the low of the day, so we're actually using from midnight that day, is broken, we enter the trade. So this trade here, for example, the low of the day since midnight was broken at this point here, and we got in short. If the high of the day was broken, then we would go long. So let's look at the results of this strategy. There's the equity curve, which is quite nice. And as I said, looking at the green dots, we are making new highs from the development date, and that's really, really good. We've got 150 pip stop loss and a 470 pip profit target. I am actually going to ditch the profit target because it really doesn't add too much to the strategy. So we're not going to use that when I look at the improvements. Now, in this next workspace, you'll notice a lot more exits of the trade. And what I'm doing is I'm using that first profitable close exit that I mentioned earlier. I didn't plan to use it, but I thought, let's give it a go. And actually, my suspicions were confirmed. It doesn't particularly add any performance to the strategy. So let's quickly look at the results. We are making a nice equity curve. I think that is quite nice, although we're not making any new highs quite yet. But if we look at the average trade, we've only got an average trade of 3,600 yen, which is far too small, much smaller than the original. And we've got more trades, we've got 4,173. Let's just compare that average trade value to the original strategy without the first profitable close. See, here we got an average trade much bigger at almost 11,000 yen and less trades. We're staying in the trades longer. Using that first profitable close type exit on this strategy, as I've often found, is it cuts the trades just too short. I mean, sometimes looking at the trades, we're only in the trades a matter of hours. It's not giving us a long enough time to make a decent average trade or a decent chunk of profit. The first profitable close type exit is suited better for trades that last a little bit longer rather than just a matter of hours. And you can see that with the results of the exit in this strategy. I mean, nice consistent behaviour, we can see that in the equity curve, but the average trade is just too small to trade once we've paid some slippage, commissions, etc. So now we know what modification doesn't work. Let's go over to the whiteboard and talk about the modification that I want to show you, which does work. So we already know what prices to enter the market at, and we've already talked about the time window to enter in. Now I'm going to explain the trade filter. And for the trade filter, we're going to be looking at the daily bars. We have a long filter, which is the top one, and a short filter, which is the bottom one. And let's assume that we've got a bar here, and this is today. So we're looking for a trade, or we're looking to place our buy stop order today. The next thing we need to do is to look back at the previous 5 daily bars, and we want to see that we're in some sort of an uptrend. And how are we going to determine whether we're in an uptrend? Well, what we're going to do is we're going to look at the highs. We're going to look at the high of 1 bar back, or in this case it will be the high of yesterday's session. So we're looking at this high, and we want to make sure that this high is higher than the high of 5 bars back, and that's going to give us our rule for being in an uptrend. So we only want to exit short trades and enter new buy trades, because it's a kind of stop and reverse strategy, if our long filter is true or is in place. Okay, and the opposite, or kind of the opposite, what we're using the lows, is true for short trades. So we only want to exit a long trade and enter a short trade if the low of yesterday, or the low of 1 daily bar back, is less than the low of 5 days back, or 5 bars back. And that's it. It's that simple. So it's a way of determining, a little bit of an uptrend, a little bit of a short-term uptrend, and a little bit of a short-term weakness or short-term downtrend. So let's go back to the computer and have a look at the results and have a look how it's improved the quality of the trades. So now we've seen that daily filter for the longs and the shorts. Let's take a look at the results. And if you decide to use this strategy or want to have a play around with it, like I said, you can get the original rules in the original video, which I'll link, or get that free PDF. I'll link that down below, and then just add on this trade improvement if you want to use that. And you know exactly how that works from what I've just showed you on the whiteboard. So looking at this workspace, it's possibly a little bit confusing, but on the top pane here we've got our trades like we saw before, and on the bottom pane we've got our daily bars. Now, just as an example, I'll show you the trade filter. So this day here, this session here, we've gone short. So we want to know that on the previous session, so on yesterday, which is this bar, we need this low to be less than the low of the 5 bars back. So this is 1 bar back, 2, 3, 4, 5, and here's the low. So yes, this low is lower than this bar, so we can go short. Looking at this long example, this is what we want to look at, 1 bar back. We want this high to be higher than 1, 2, 3, 4, 5, and yes, obviously it is higher than the high of 5 bars back. So yes, we can exit the short trade and go long. We've still got our 150 pip stop loss, and like I said, I actually got rid of the 470 pip profit target because that's rarely hit. Let's have a look at the performance report. And there's the equity curve. It's still a really nice equity curve. Not quite as smooth as the original, but then we've got far less trades, and that's the reason why. But nonetheless, it is a nice equity curve. But let's have a look at the average trade value, which is the quality of trade. This is what I'm most interested in. Before, without the filter, we had an average trade of about 10.8 thousand yen. Now we've got 22,000 yen. So it's doubled the average trade and doubled the quality of trade, which I like to call it. So for every trade, we're actually making more money. However, we are taking far less trades. Look, we've only got 653 trades, as opposed to without the filter, we had over 3,000 trades. So far less trades, but the trades are of better quality. If we look at the net profit, we're making 14.4 million yen. That's because we're taking such fewer trades, whereas before we were making about 34 million yen without that filter that we've just introduced. The reason that the average trade value or the quality of the trade, we're making more money for each trade, is probably because we're probably holding on to trades longer. We're in the trade longer because now we've got extra criteria, we've got extra conditions to say you need the uptrend or the short-term downtrend to be in line before we take the signal, whereas before we were taking every single signal and we're probably in trades less time. In fact, let's look at the time that we spent in the trades. If we look average bars in trades, now I'm using a 15-minute chart at the moment, but average bars in trade using the filter is 472 as opposed to without the filter only 104 bars, so almost 5 times as long in the trade, and that's what's giving us a better quality trade. It allows us time to make more money for more of a trend to become established. So if you're somebody who places trades manually, you're not using automated software like I do, then you might want to use this filter because you're trading less. All you do is you look at yesterday's bar, see if the high is higher than 5 bars ago, or vice versa for shorts, and if it is, then you know for the next day you're going to be looking to place trades. If it's not, you just do nothing and wait until the next day. So it could be quite a convenient little filter. Anyway, there you have it. You've got the 2 options, filtered or not filtered. Link for the other video and the free PDF down below if you want it. I hope you found this video useful, hope you found it interesting, and if you've liked it, please hit the thumbs up button. Anyway, until the next video, this is Jared Goodwin, and thank you.